This is one of the most simple trading model you could use in your trading. So, starting with your 3-step plan, first, which is the most important part, is looking for your previous day's low or previous day's high to get a sweep. Once you get the sweep, you go down to your low time frame. For this model, it will be the 15-minute time frame to look for displacement. After you get your displacement, all you would need to find is an order block to enter off of, and that is pretty much all you need to be profitable. This is the key lesson for today. Yes, you can study, learn, watch as many tutorials as you want, trying to figure out new concepts constantly, but in the end, all you really need are a few tools. For example, some of the most successful traders out there, all they use is support and resistance. They are the ones who execute with the least trading tools but generate the most gains. Moving on, here are some additional information for this model. We will be executing within the London kill zone, which is 2 AM to 5 AM New York time. Ideally, we would like to see the sweep happen during London. However, if it happens during Asia, this model is still valid and we could look for continuation entries in London. Note that this model also works with New York session. And for our target, we will be aiming for fixed RR. I have seen these setups run for much higher RR, but for simplicity's sake, we will be sticking with fixed 2R and use London session only. There is a lot of space for refinements in this model, so if you guys do refine this, let me know how you done it in the comments. Alright guys, I will now demonstrate this very simple trading model using FX Replay, which is a backtesting software that allows you to enter real positions. So here, I set my account balance to 100,000. We'll be risking 1% per trade, and let's see how it goes. So, first of all, let's make you aware of the 3-step plan again. The first one is you want to see a previous day's low get swept or previous day's high. And then, on the lower time frame, which is your M15, you want to see a displacement in the opposing direction. Third step, you want to look for an order block to enter off. And that is your 3-step plan. So make sure you remember that, and let's get started. So, focusing on just London session, which like I said, starts at 2 AM and ends at 5 AM. Your executions will happen between those two times. Marking out your previous day's highs and lows. Let's play this candle out to make sure it closes fully. Right. Marking out your previous day's highs and lows. So this is your previous day's highs, and this is your previous day's low. Now we go down into the 50-minute, and then we go to the London session to see what price does. London session. Let's see if that actually sweeps it. This is 6941, 6943. So it sweeps it by just about 2 pipette. And now we can look for our displacement. And that is where you had your displacement. Market structure break, confirming a change in trend. And then here you have these 2 consecutive bullish candles, which makes up your bearish order block. Marking that out. This is where your entry could be at the open of that order block, and then stop loss at the close. Targeting your fixed 2R. Now let's place an order. So initial balance, 1% risk, save. Putting price out, taps us in, and let's see if it hits our TP. And so it does. That is your first winning trade, 2R. Next one. So remove that for now. Wait for this daily candle to close. So it closes. This is your previous day's low. This is your previous day's highs. As you can see, it's already got swept during Asia, right? So now let's see if London gives us that displacement. Right, there's no displacement. Compare this price action to this. You want to see clear displacement. So that doesn't happen. Now let's go on to the next day. Fine. No trades that day. Right, next day opens. Previous day's highs, previous day's lows. Going back down to the M15. And then you go to your London session. Right. So London session has ended here. No trades. Next candle opens at this highs, so it takes out the previous day's highs already. We go back down into the M15. And let's go to London session. Right, so here, because Asia already took out that high, and we had that displacement during Asia. So this becomes your market structure shift. During London, you could enter off straight away without needing to wait for a displacement during London. So here you can enter off this and then target 2R. Placing order of these order blocks. Right. So it taps us in and then it takes us out. Fair enough, but the model is still valid. On to the next one. Ideally, you want to limit yourself to 1 loss per session. So after we took that 1 loss, we wait for the next session. Because taking 2 losses per session is too much. So then, next candle, previous day's highs get swept. Let's go to London. Oh, we get that displacement down. Yeah, market structure shift. With displacement, however, the kill zone ends and it is giving us no entry opportunities, which is fine. So we go on to the next one. Yeah, previous day's highs, previous day's lows. Same thing again, M15. And then we go to London session. Nothing gets taken, so we go on to the next day. Next day sweeps the previous day's highs. Let's go back down onto the M15. Sweeps it during Asian, gives her that displacement. Alright. This is where you had your market structure shift. So here, 130, 45. Here you could use this entire order block to ensure that you get in. Because if you go up to the high time frame, that is just one bearish order block. Right. So here, entry above the order block, and then you target 2R. Right, so let's see if this taps us in. Place order, taps us in, and let's see if it hits our TP. Right, done. Another 2R. So let's look at our next example. Previous day's highs, previous day's lows. Go to London session. Alright, now to see we have a displacement down. We don't. So we move on to the next one. Alright, so here you have your previous day's highs. Price open is above that. So go into M15. Let's go to London session. Right, during Asia, we had that displacement down. That still makes it valid. So after we took out this low, market structure shift. Respect of this PD array, price comes back during London session to this order block. And here's where you can have your entry. So let's place that there. Here. Stop loss above the overall high. And then target the 2R. Right. Because we couldn't execute it in time when London kill zone opened, we're going to place an order below here. And that becomes your sell stop. So place order. Sell. Sell stop. And let's play price out. So it taps us in. And then let's see if it hits for our 2R. Done. Another 2R. Now, for this segment of the video, it will be sped up with me collecting around 1 month's worth of data, so make sure you watch till the end to see what the data looks like. And that concludes this backtesting session. It was around 1 month's worth of data. We gained 8% for this very simple trading model. Our win rate isn't the highest, it is around 54%, but because of our fixed risk to reward ratio, which is 2R, this makes the strategy profitable. Because this isn't how probabilities truly work, but if you think of it as a literal dummy, every time you take a trade, you have a 50% chance of it winning. And since all your winners makes up for 2 of your losers, looking at it from a wider perspective, you will end up profitable in the long run. Another thing is, you might not be used to taking only 13 trades in the span of a month, right? So here we had a total of 13 trades. Because I'm sure a lot of you like to scalp and take more trades, but that doesn't necessarily make you more profitable. It just exposes you to more risk. And if you get into the mindset of thinking professionally, this is way more than enough to make a very, very decent living. Imagine with a 200k funded account. If you make 8%, that is 16,000 a month, which is very stupid money. Don't expect 8% every month. It is highly unrealistic, but it shows you the possibilities. Realistically, you should only aim for 2 to 4% a month. And what are you doing? Spending like 2 hours a day to make that. So why stress yourself out with more trade frequencies? Take it slow and lower your expectations. At the end of the day, your win rate and your risk to reward doesn't matter as much as you think. And neither do your trade frequencies, right? As long as your profit factor is above 1, which is your total profit divided by your total losses, you will be profitable in the long run. So here, if we look at our total profits and total losses, this is 2k, 2k, 4 grand, 8 grand, 12 grand, add another 2k, that is 14. So here, our profit is 14, total profit is 14, total losses is 226. So 14 divided by 6,000, your profit factor is 2.3. That is above 1, which means in the long run, you will be profitable. And that is the most important figure, your profit factor. So it doesn't matter if you have a, very low win rate, a high risk to reward ratio, or very high win rate and low risk to reward ratio. As long as your profit factor is above 1, the P&L gains will just happen naturally. And that concludes the end of this video. If you guys have any questions or suggestions for future videos, be sure to leave a comment. Don't forget to like and subscribe. And as always, take care.